Hey everybody, it's your old pal Brian Hunt, and welcome to another episode of 60 Seconds of Risk. Today we're coming to you from the beautiful Tower Club in downtown Dallas, and today I've got a very special guest. The gentleman to my side here, Mr. Ray Alleto. Ray, thanks for coming to the show.
Thanks, Brian.
So Ray, why don't you introduce yourself and your role, because a lot of people here in North Texas know who you are in construction, but not everybody out there may know who you are.
Great, thank you. Ray Alleto, I'm the Director of Risk Management for the Beck Group. Beck is a billion-dollar architectural services and commercial construction contractor. We're located, about 70% of our business is in Texas, with offices in Fort Worth, Austin, and Dallas. We also have offices in Denver, Atlanta, Tampa, and Charlotte.
And I know from the past that you guys sometimes do maybe some international work here and there as well.
Especially on the design side.
Correct, yeah.
Our architectural business is very robust and actually international.
So with your role responsibilities, you've got you're sort of the tip of the spear respects to the company as far as managing risk and looking at things holistically. Because you've got moving people parts all over the country and all over the world, correct?
Yeah, we do, and it's interesting with the professional liability side of things, with the design business.
Yeah.
That's one aspect of the function. Commercial construction, everybody in the construction industry understands what that entails. The construction industry in particular has some risks that are unique.
Very much so.
I've been in risk management for 40 years, only the last 3 with Beck. And I've noticed that there are a lot of things here that are very specific to the construction industry: builder's risk, subcontractor default, contractor control or owner controlled insurance programs. There's some things that are unique.
And I think a lot of people don't necessarily understand, and I'm relatively new to construction as well. I mean, having been here at USI 5 years at Aon prior to that, and I used to work at Austin Industries, I'm a general contractor too. And I had this preconceived notion of construction before I got there. I was like, hey, where's all the plumbers and all the electricians? And especially here in Texas, where most general contractors are zero performed and sub out everything. That whole concept of managing your subcontractors and your trades and timing, it really is one big orchestrated dance.
Right, and it's interesting. I also was surprised by that and realized that there's a reason that we're called contractors, because we contract out all the actual work to be done.
That's a very good point.
and that actually is a nice segue into what I wanted to talk about today.
Sure.
With regard to contract and contractual risk transfer.
Absolutely. So obviously, in the nature of a general contract, in your role, and you have a legal background as well, it's all down to the risk transfer between the owner to the GC to the subs down, and that whole concept of the contract, and does it align necessarily with the insurance program?
Well, exactly. And the points that I want to make today are that risk identification is clearly what we do in risk management. Yeah, a lot of people look at us as the insurance people.
Correct.
Yeah, when we manage insurance, we negotiate insurance policies and programs, we structure them. But at the end of the day, you have to first and foremost understand what risk your company faces.
Correct.
And what risks have you taken on. Now we know a lot of those things just from our activities.
Right.
But particularly in the construction industry, most of our exposure comes from what we agreed to in those contracts. And so there's a number of areas where I think it's incumbent upon the risk manager to understand what kind of risk the company's taken on so they can address it properly with the appropriate risk mitigation, loss prevention, and then financing, whether it be insurance or some other alternative.
Yeah, and I think that's critical from my perspective. Like, if you have a contract and you have the insurance policy. Now, obviously, hopefully there's a seamless alignment between the two, but sometimes there might be gaps, because not everything can be placed with an insurance policy.
Right, and too often risk managers, I think, look at or are asked to look at just the insurance requirements of a contract.
Yeah.
I've always been of the opinion that don't just give me the insurance language, I need to see the whole contract.
Agreed.
I need to understand what it is we've agreed to, how we're going to operate. And there's the key things in the contract, the biggest of which is indemnification.
Okay.
There are different kinds of contractual indemnity. It would behoove the risk manager to understand the difference between a type 1 indemnity and a type 3 indemnity, right?
Yeah.
So there's a lot of things to get involved with. Getting legal advice on if you don't understand those things fully.
Correct.
Making sure that you understand what you've taken on. And then, to your point, dovetailing those indemnification requirements with the insurance requirements to make sure. Now, some people look at it as belts and suspenders, when it's really not. The contractual indemnity, provides the owner, with both parties actually, with rights and responsibilities that are legally enforceable.
Correct.
the insurance is sort of the backstop for that. So there's insurance to ensure that, or provide assurance to the owner that there is a financial protection in place. But at the end of the day, the rights come down to what's in the indemnification.
Yep.
So that's important. The other major clauses to look at, limitations on liability, are often overlooked or underappreciated, and sometimes not understood.
Yeah.
Waivers of subrogation is another major area of the contract. You have to understand what you've agreed to.
Yeah.
Make sure that your programs actually can accommodate what the contract has provided.
Well, and that's a key point, because I think I mentioned we had some talks before. It's like waiver subrogation. You might have that in the contract, but you specifically need that endorsement or coverage from the carrier to actually make that be part of the policy.
Actually, there's some recent case law in Texas having to do with that very subject, where it was agreed to between the parties, but the insurance policy didn't give the insured, the contractor, the right to waive subrogation, and the court said, well, maybe the policy didn't give them that right, and you can take it up with them some other way. But at the end of the day, between the owner and the contractor, they agreed to the waiver.
Wow. So I mean, I think we talked about this earlier, but there are so many moving parts in insurance, and as it respects to construction and the operation of a construction firm. They're working with the designers and the engineers, the owners reps, GCs, second tier subs upon subs, and you've got maybe also permitting in the government. There's a lot of moving parts.
There are. I'm glad you brought up the regulatory side.
Yeah.
There's a lot of regulatory activity around construction, right?
Yeah.
So those are all important things. Claims, claims happen.
Correct.
With all those parties, by the way, that's really where the advent of controlled insurance programs came from. There's so many different ways to insure, and there's the one most efficient approach is through a controlled insurance program, where basically you have one set of policies, workers' comp and general liability, for example, that cover all the subcontractors and the owner and the GC and major suppliers sometimes. People for all the work that's done on a particular job site, as opposed to having an owner having to go out and worry about 30 or 40 different parties, all of whom have their own policies. All of whom have their own limits, terms and conditions, and exclusions.
Correct.
Right. So there's no way to really make sure that the program is comprehensive enough to protect the project.
And you made reference as far as you're crossing so many state lines, like in Texas, the anti-indemnity statute makes a RAPA very attractive, or sometimes even required by lenders.
And every state, 23 states, I think, have anti-indemnity statutes. Some of them only apply to construction, some don't. And they all have their own language. In Texas, there's 14 exclusions to the anti-indemnity statute. So that all affects what you've agreed to. So you may have agreed to things that aren't even enforceable in a particular state.
And that's why I imagine, like a firm like Beck or your peers, when you're across the state lines, it's critical to have the internal infrastructure and also maybe external legal parties that can help you to navigate those different jurisdictions to ensure that your policies and your contracts are up to snuff, whether it be Louisiana or California or Florida.
Right, no, that's exactly right. We have a terrific in-house legal department that is well-versed in all the law of the states where we operate. But we also have outside counsel in all of those states as well. And you need that. I mean, there's just too many different avenues when you think about all the things that a legal department has to deal with with regard to employment and contracting. It goes on and on and on. Construction defect. How construction defect is treated differently in every state.
It's a lot of moving parts.
there are, but it also is what makes the job interesting.
Amen. Well, obviously, Ray, you've been working insurance and carrier side and broker side and working internally for risk management for a lot of different entities. So you've seen a lot of different things and you've experienced a lot of different things. If you could take that one moment and think about, if you were to watch our audience, say, what would be that one or two things you'd like to make sure people understand about construction risk or insurance, like that 1-2 things that, hey, make sure you're looking for this, or make sure you pay attention to this?
Sure. Just in construction in general, builder's risk insurance is not well understood. It is, and I'm not being biased, but I really believe this. It is best that the contractor be allowed to provide the builder's risk coverage. So they can have, it's the 3 C's, cost, coverage, and control. Got to be able to control the claims. We will be able to provide a builder's risk coverage at a lower rate with fewer exclusions because we have a rolling program. We have hundreds of millions of dollars of projects enrolled. It's not like going out and buying a specific, project-specific policy for one project, where, a claim could adversely affect your ability to get another policy.
So, and that's that point, so that based on your backlog, you've gone to negotiate to the markets to show we're gonna have this many projects coming up, so therefore kind of buying power, get the best rate possible for the market.
And the best terms.
The best terms,
We have the fewest exclusions, we have the broadest coverage, and the lowest rates.
That's important.
And when we don't have that kind of control on a
Yeah.
project, because an owner decides they want to do the insurance, it's just more difficult. And look, we can get the best deal.
Amen.
At the end of the day. That's on the construction side.
Yeah.
In general, I really think this idea of risk identification is crucial and something that gets missed a lot
I agree.
in the risk management community. We're not about just buying insurance.
Yeah.
We need to be about understanding the business, understanding what risks are being taken, what are the exposures to loss, and being able to address those in the most efficient way with both insurance and other alternatives.
Correct.
Go all day long about
Yeah.
captive,
Yeah.
self-insurance.
There's a lot of things
how we
out
handle
there.
all that.
SDI, yeah.
Yeah, there's a lot of different ways to do it.
Sure.
It takes a holistic or an enterprise approach to evaluating risk. I think evaluation and identification of risk is what we should be doing best.
Oh, I totally agree. And at least from my perspective, I'm working with my clients, I always tell them, like, it's not my job to tell you what you want to hear. I need to tell you what you need to hear so they can make an informed decision. Now, in the design, they either retain it, transfer, or get an insurance policy.
Exactly.
But at least they're making an informed decision.
Good point.
Fantastic. Ray, thanks so much for being on the show.
Thank you.
Hey, everybody, hope you enjoyed this. Obviously, getting the opportunity to have someone like Ray Alleto on this show is always makes this thing a little more enjoyable. Hopefully, you found it knowledgeable. Once again, hopefully you like this. If you saw something you like or comment, or it's a particular topic you want to see or someone on the show, please post your note on LinkedIn. Also, don't forget you can subscribe to my channel on YouTube, and you can also find clips of these through Twitter. Again, everybody, this is Brian Hunt with Ray Alleto. Thanks so much.
Thank you.